Welcome to Drill Down Earnings with the latest look at earnings from MongoDB, an important quarter for an important company. This is the business story behind one stock on the move. I'm Cory Johnson, Chief Market Strategist for Futurum Group. We like MongoDB because it's a database company, it's a software company, it's a big, important tech company in New York City. Yeah, these guys selling enterprise software out of New York City and reporting a pretty big quarter, $458 million in revenues, up 27% on a year-over-year basis. But all Wall Street cares about is a beat or a miss. Wall Street, New York also. Well, look, this was a beat, about 5% better than Wall Street expected. And the company losing money still, but a better margin in terms of those losses. But let's look deeper into the business beyond those headline numbers. So the key business here is their Atlas database. It's their non-relational database that they say is designed perfectly for the weird large language models of all kinds of unstructured data, the ability to amass incredible amounts of that stuff, organize it, sort it, and get it ready for the vectorization of a large language model and AI usage. It's kind of an amazing thing. Well, their Atlas database business had a really good quarter, 34% year-over-year growth. But if you think about it, their overall business up 27%, Atlas up 34%. Atlas is really the name of the game here. And while the company is still losing money, as I mentioned, operating margins improving 5 percentage points year-over-year. But the CEO volunteered in prepared remarks at the beginning of the conference call over and over again. Things were stable. Growth is stable. Customers are stable. Everything is stable. Well, Wall Street didn't want stable. Wall Street wanted gangbusters. So when you look at the chart after hours, down 9%, an unstable move because they got stable customers. But if you look at the one-year chart, my goodness, this stock has well over doubled in the last year. So maybe you might expect a little bit of a sell-off on stability. CEO Dev Ittycheria, try to explain some of the stability, the lack of animal spirits in the world of AI with his customers. Here is the CEO of MongoDB.
If you played with ChatGPT or any of the other chatbots out there, or large language models, you know that the performance of these applications, you get response time in the 1 to 2 to 3 seconds, depending on the type of question you're asking. And, so naturally a chatbot is a very simple but easy to understand use case, but to embed that technology into a sophisticated application, making real-time decisions based on real-time data, the performance and to some degree the cost of these architectures are still not there. Also, customers are still in the learning phase. They're experimenting, they're prototyping, but I would say you're not seeing a lot of customers really deploy AI applications at scale. So I think it's going to take them, I would say this year is a year where they're going to do, probably roll out a few applications, learn, and then, as they get more experience, become more comfortable in rolling out more and more applications as both these technologies mature and the costs come down.
So I think this makes a lot of sense. It sounds like what the world looks like from my point of view is that it's going to take a little while for this stuff to roll out, but MongoDB putting themselves in the right position when that happens. All right, what's it all mean? The big drill down earnings takeaway and one number, the bite that tells us a whole lot. We'll have that right after this.
The drill down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
Drill down earnings takeaway on MongoDB reporting fourth quarter results. A really good quarter, 67% growth on a year-over-year basis for the New York database company. $458 million in sales in a quarter, and margins got a little bit better. But one number that tells us a whole lot is the growth rate of their business, Atlas. MongoDB saw AI sales driving Atlas sales, and while the growth rate has slowed down, your bite, 34%, the growth rate has slowed down. It stopped the pace of the slowdown. I think it's pretty impressive. It shows that things are stabilizing. It's exactly what the CEO told us. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. Your Drill Down Earnings takes away on Instagram, on TikTok, robust earnings reports on YouTube. Check me out on X at CoryTV. Drill Down Earnings, part of 6.5 Media.